Bitcoin has surged past the $105,000 mark today, hitting a new all-time high. This surge comes amidst a dramatically altered financial and political landscape that has emboldened investors and crypto enthusiasts alike. The election of a decidedly pro-crypto president coupled with a Republican-controlled House and Senate has injected a much-needed dose of optimism into the crypto market. Gone are the days of regulatory uncertainty and hostility from Washington. The new administration has signaled its intent to foster innovation in the digital asset space, promising a more hands-off approach to regulation. This shift in tone is a far cry from the previous administration's skepticism and outright hostility towards cryptocurrencies. The departure of Gary Gensler from the SEC, a figure often seen as antagonistic towards crypto, has further fueled the bullish sentiment. Rumors are even circulating about the potential for a strategic Bitcoin reserve, mirroring the gold reserves held by governments globally. Such a move, while still speculative, would represent a monumental endorsement of Bitcoin's role as a store of value and a strategic asset. This confluence of political and institutional support has created a fertile ground for Bitcoin's price surge. Adding fuel to the fire is the growing acceptance of Bitcoin by Wall Street giants. BlackRock, the world's largest asset manager, made headlines last year when it announced plans to offer Bitcoin-related investment products to its clients. This move, along with similar announcements from other financial institutions, has been widely interpreted as a sign of mainstream acceptance for Bitcoin. Institutional investors, once wary of Bitcoin's volatility and regulatory uncertainty, are now increasingly viewing it as a viable asset class. Their entry into the market brings with them vast amounts of capital and a sense of legitimacy that was previously lacking. This institutional adoption is a key driver of Bitcoin's current price rally. Despite the positive political climate and institutional interest, regulatory uncertainty remains a key concern. While the new administration has adopted a more favorable stance towards crypto, the specifics of future regulations are still unclear. The crypto industry eagerly awaits clarity on issues such as taxation, anti-money laundering compliance, and investor protection. The global regulatory landscape is even more complex, with different countries taking vastly different approaches to crypto regulation. The lack of a cohesive global regulatory framework could stifle innovation and hinder the growth of the crypto market. Analysts are divided on Bitcoin's future trajectory. Some, like prominent crypto researcher Utkarsh Ahuja, predict that Bitcoin could reach $200,000 or even $500,000 within the next year, driven by factors such as increasing adoption, limited supply, and a weakening US dollar. Others urge caution, pointing to potential risks such as regulatory crackdowns, market manipulation, and the emergence of competing cryptocurrencies. The macroeconomic environment also plays a crucial role. The Federal Reserve's monetary policy, particularly its stance on interest rates, could significantly impact Bitcoin's price. Rate cuts, often seen as inflationary, could drive investors towards alternative assets like Bitcoin, potentially pushing its price higher. Conversely, rate hikes could dampen investor enthusiasm and put downward pressure on the crypto market. The road ahead for Bitcoin is paved with both promise and uncertainty. While the current political and institutional landscape appears favorable, significant risks and challenges remain. Only time will tell whether Bitcoin can maintain its upward trajectory and fulfill its potential as a transformative financial asset.